Welcome back to the deep dive. Today we are doing something a little different. We're stepping right into the immediate present, early 2026, to settle a debate that is, honestly, if you're in any sort of finance group chat, probably driving you completely crazy right now.
Oh, yeah. It's inescapable.
It really is. We are looking at a massive stack of research from the Daily Fiscal, including this longitudinal study tracking 47 different portfolios all the way from 2019 to 2025. And they posit a really provocative idea here. The era of choosing a brokerage based on commission fees is just, well, it's dead. It's buried.
It is ancient history at this point. I mean, if you are still comparing commission costs in 2026, you are fighting the last war. The whole race to zero, that happened 5 years ago. It's over.
Right. So if it's not about the fees anymore, what is it actually about? The source material argues that picking a brokerage today isn't a financial utility decision. It is about choosing a financial religion.
That is the core metaphor they use. And honestly, the data completely backs it up. We aren't really seeing a spectrum of investors anymore. We are seeing a hard split into two completely distinct churches.
Two opposing sects.
Exactly. On one side, you have the Church of Data. That's Webull. It is technical, it is intense, it's high friction. It's really built for the people who want to see the actual plumbing of the matrix and get their hands dirty.
And then the opposing sect, as you said, is the Church of Lifestyle, and that is Robinhood, specifically their gold ecosystem. And that one is built for passive accumulation, total friction reduction, and essentially just making sure your money is compounding while you're asleep.
And that right there is the mission of this deep dive. We are not going to just read you a feature spec sheet. We're going to look at the actual behavioral data from those 47 portfolios to answer the only question that really matters for you.
Which is, which of these apps actually makes you smarter?
Exactly. Because in 2026, the app you use dictates the investor you become.
Smarter is a loaded word, though, right? Because smart for a day trader is very different from smart for a retirement planner building a nest egg. And since this study covers a long stretch, we're seeing the long-term effects of these platforms on actual human behavior.
Precisely. This is not a snapshot. It is a trajectory. And the divergence point, the actual moment these two churches really split off into totally different realities, was the integration of generative AI.
Ah, yes, the clash of the Silicon advisors. Let's unpack this. Both of these apps now have AI baked directly into the workflow, but they have completely different personalities. Let's start with Weeb's AI.
Vega. Vega is intense. If you've played around with it at all, you know it is not trying to be your buddy. It's trying to be your junior data scientist. The source literally describes it as having a personal quant in your pocket.
Yeah, I was reading the case study on this and the research, and the speed is just what stood out to me.
Yeah.
They gave this specific example of a user who was analyzing a semiconductor watch list, 12 different tickers. And in the old days, say, 2023, analyzing the options chain for 12 stocks, looking for volatility spikes, IV rank, delta hedging, that is an hour of work.
Easily an hour. You're toggling screens, you're exporting data to Excel, you're literally missing the trade while you sit there doing the math. It was manual labor.
So the author just asks Vega to do it instead.
And 4 seconds later, you have a comparative table. Boom. Not just prices, but implied volatility percentile, volume anomalies, and a full risk assessment based on historical standard deviations. 4 seconds.
That speed advantage is wild.
It is, but honestly, I think focusing just on the speed misses the much bigger shift here. The real disruption that Vega brings is the rise of no-code strategies.
Yes. This was the part that felt the most sci-fi to me.
It's the total democratization of algorithmic trading. Historically, if you wanted to say, buy NVIDIA if the RSI is under 30 and the volume is 2x the average, you needed to know Python. You had to code a bot yourself.
Which immediately eliminates 99% of retail investors.
Of course. But Vega has this visual interface for it now. You just drag and drop those logic blocks. You are building an actual algorithmic trading strategy without writing a single line of code. It's turning the average retail trader into a quant fund manager.
So Webull is essentially saying, we will give you the tools of a hedge fund. That is the Church of Data right there. But then you flip over to Robinhood and you meet Cortex, and it just feels like a totally different species.
Because Cortex isn't a quant. Cortex is a wealth manager. If Vega is that caffeine-fueled analyst shouting numbers at you across the desk, Cortex is the calm advisor in a nice suit telling you to just worry less. It's designed for the user who actively wants to spend less time in the app.
The major distinction the source makes here is digests versus alerts.
And that's a critical distinction. There was this great profile in the research of Sarah, a 34-year-old teacher in Austin. She's a classic Church of Lifestyle member. She explicitly told the researchers, I don't care about MACD crossovers. I don't even know what a Bollinger Band is.
Which, let's be entirely honest, is most people.
Exactly. So Cortex doesn't bother showing her that. Instead, it just pinged her with a digest. It said, your NVIDIA holding is up because of an earnings beat. But then, and this is the killer feature, it asked her a question.
Do you want to rebalance your dividend shares to maintain your target allocation?
Yes, that is slick. It is not asking her to analyze a bunch of charts. It's asking her to execute a strategic decision.
Proactive wealth management.
Exactly. One tool, Vega, is designed for active engagement and hunting alpha. The other tool, Cortex, is designed for keeping you on the rails. It actively prevents you from making emotional mistakes by just simplifying the inputs you see.
So we have the personal quant up against the wealth manager. That is the AI battle. But we really can't talk about these apps without getting into the screens themselves, because when you open Webull in 2026, it physically hits you in the face. The source calls it Bloomberg Light.
That is definitely not an exaggeration. I actually think Bloomberg Light might be underselling the sheer density of it.
Yeah.
If you open Webull today, it is incredibly crowded. It is data heavy. There are tabs nested inside of other tabs.
They mentioned a user quote in the study that actually made me laugh out loud. A new user signed up and immediately asked customer support, where do I find my bank balance? Because there were just so many charts and order books completely covering the screen.
It definitely has a massive learning curve. But that density is the feature. It's not a bug. We need to talk about the premium subscription here. For $3.99 a month, Webull gives you NASDAQ Total View.
Okay, let's pause right there. For the listener who maybe just buys standard ETFs, explain why level 2 data, the total view, actually matters at all. Is it just more noise?
The source uses a great analogy for this. It's the difference between seeing the math and seeing the road. Standard data just shows you the last price, what the stock literally just sold for. That is history. Level 2 data shows you the intent.
Meaning the order book.
Yes, it shows the full order book, every single bid and every single ask sitting out there just waiting to be filled.
So you can actually see the walls?
Exactly. If you're an active trader, you aren't just looking at the price anymore. You are looking at the pressure. You can see, oh, there are 50,000 shares for sale right at $150. We are not going to break through that level easily. You see the supply and demand in real time. You absolutely cannot see that on a standard line chart.
So Webull is basically giving you X-ray vision for the market. But the other major thing they give you, and this is where the lifestyle really shifts, is time.
Time is the ultimate asset for the Webull user.
The market hours are crazy. Webull opens at 4 a.m. Eastern.
Think about the physical geography of that. If you are on the West Coast, that is 1:00 a.m. But there is a very specific demographic, the global macro retail trader who absolutely loves this.
Because they're trading the London Open.
Right. They are reacting to news out of Tokyo or Frankfurt while the rest of the U.S. is literally still asleep.
And it's not just stocks either. The source explicitly calls it asset horsepower.
Because Webull supports futures and Forex directly inside the app. That is a pro-level toolset. If you want to hedge your tech portfolio with crude oil futures, or you want to trade the USD pair because the ECB just dropped an announcement, you can do all of that natively in Webull.
And the crypto depth.
Significant difference there. Webull has nearly 3 times the selection of Robinhood. We are talking 65 plus coins versus maybe 22 on Robinhood. If you want to trade totally obscure altcoins at 3:00 a.m. on a Tuesday, Webull is the Church of Data's playground.
It's a tool for the hunter. That is definitely the vibe. But now, let's cross the street here. Let's look over at the Church of Lifestyle. If Webull is this complex fighter jet cockpit, the source argues that Robinhood has essentially become a castle.
The castle metaphor is so perfect because castles are designed for 2 very specific things: defense and containment. They keep you safe from the outside, sure, but they also keep you in. This is all about ecosystem stickiness.
And the mortar holding this entire castle together is Robinhood Gold.
$5 a month. But in 2026, it has effectively become a high-yield anchor for your entire financial life.
We have to talk about the flywheel effect here, specifically the IRA match. This feels like one of those marketing things that sounds small at 3%, but when you actually run the math on it, it's huge.
It is mathematically undeniable, and honestly, I am surprised more people don't realize this is just free alpha. If you max out your IRA for 2026, the limit is $7,000 for those under 50. Robinhood literally drops a $210 bonus straight into your account.
Just for using the platform.
Just for existing inside the castle walls. And because it's inside an IRA, The $210 compounds tax-free for 20 or 30 years.
Yeah.
If you assume standard market returns, that tiny $210 bonus could turn into thousands of dollars in retirement wealth. That isn't a perk. That is a distinct ROI advantage over almost every other brokerage out there.
And then you layer on the gold card, 3% cash back on everything.
On everything. There are no categories to track. But the genius part, the real castle part of this, is the funnel. That cashback doesn't just sit around in some useless rewards portal. It is automatically funneled right back into your brokerage account.
So buying your groceries actually buys you Apple stock.
Exactly. It turns your daily consumption into capital production. You spend money on gas, you get cash back, it drops into the market, it grows. It creates this closed, infinite loop. And that connects directly back to the UI experience. The source calls Robinhood the video game, but I really think lifestyle app is more accurate.
Because it's clean and it's fast.
Right. The search pages are beautiful. The entire goal of Robinhood is to make you feel like your money just works while you go live your life.
Contrast that with Webull, where you feel like you're actively piloting a spaceship and managing every single variable manually.
Webull is work. Robinhood is flow.
But, and this is a massive but for anyone listening, we have to talk about the cost of that flow. Because sometimes when things are easy and pretty, you don't notice what the source calls the margin parasites.
This is where we have to get completely visceral. We need to drop all the marketing fluff and look at the actual margin math. Because this is usually where the Church of Lifestyle can hurt you if you aren't careful. But in this specific case, it's totally reversed. The Church of Data is the one charging the heavy premium.
Margin parasites. It is a nasty term. Let's break down these borrowing costs.
It's an accurate term, though. If you are borrowing money to trade using margin, the difference between these two apps is not subtle. It is a canyon. As of early 2026, the Robinhood Gold margin rate is sitting around 5.75%.
Which is incredibly competitive in this environment. And Webull.
The Webull standard rate is approximately 8.74%.
Wow. That is almost a 3% gap.
It sounds small, we just say 3%. Well, let's apply it to a real-world balance. The study uses a $12,450 margin balance as the median for active swing traders.
Okay, so I'm swing trading, and I've got about 12 grand on leverage. What is the actual damage there?
That 3% difference means you are paying roughly $373 extra per year to Webull, just for the privilege of using their money.
$373. That is not nothing. That is a car payment. That's a really nice dinner out.
More importantly, if you're an active trader,
Yeah.
that is pure drag on your P&L. You have to be $373 better at trading just to break even compared to the guy doing the exact same trade over on Robinhood.
That puts a serious damper on all the Webull excitement if you're a margin user. You are paying a steep premium for those advanced tools.
It forces a hard choice. You have to sit down and ask yourself, is the level 2 data, the Vega AI, the Fordana AM market access, is all of that actually worth $373 a year to me? For some people, the pure hunters out there, the answer is a definitive yes.
Because they make that back in one single trade by seeing the liquidity wall.
Exactly, but for the casual margin user, it's a terrible deal. You're essentially paying a cool tax just for using the pro platform.
Which brings us perfectly to the verdict. The source is very clear here. They do not do the whole it depends cop-out. They categorize you. They tell you exactly who you are.
And we should absolutely do the same. We need to look at the distinct profiles derived from this study.
Okay, let's start with the passive builder. If you are listening to this right now, how do you know if you belong to the Church of Lifestyle?
You belong here if you are building a 30-year castle. You want a unified financial life where your credit card rewards feed directly into your investments and your IRA gets an automatic match.
You aren't checking 1-minute candles.
Not at all. You might check the app once a week, maybe even once a month. You want the absolute lowest margin rates because you might hold a leveraged position for months at a time.
Yeah.
If that is your profile, Robinhood is the winner, hands down.
Clear enough. Now the active trader. Who belongs to the Church of Data?
Honestly, you know who you are. You are the person checking the global markets at 4:30 a.m. You need automation. You want to use Vega to build those if this then that logic blocks because you physically can't stare at the screen 24/7, but you want your strategy running 24/7.
And you're trading alternative assets.
Right. Futures, Forex. If you are actively hunting for alpha every single day, Webull is your weapon.
But here is the most important rule from the source, and I think this is where it gets incredibly interesting for our listeners. They call it the golden rule of 2026 brokerage.
Don't use both.
Which goes against a lot of conventional wisdom. Usually, people tell you to diversify your platform, spread it around. Why does the source say you have to pick one?
Because in 2026, the platforms are simply too deep. If you split your time, you are half-mastering two highly complex tools. Half-mastering Vega implies you aren't actually getting the full alpha from the AI. You aren't learning the prompt structures or the strategy builder effectively.
And half using Robinhood means you aren't hitting the IRA match caps or fully utilizing the cashback funnel.
Exactly. It's all about ecosystem maximization. Splitting your attention actively dilutes your power as an investor. You need to pick your religion and become a high priest of it. If you are on Webull, master the no-code automation. If you are on Robinhood, master the tax efficiency and the flywheel.
That is profound. It really is about total commitment. The app is no longer just a utility pipe to the market. It's a mirror of your actual investing philosophy.
You have to decide which reflection you want to see when you open your phone.
So to help you make that decision, because we definitely do not want to leave you hanging here, the source provides a very specific 7-day optimization checklist. We are going to run through this right now. This is your homework for the week.
Let's do it.
Step 1, run the margin audit.
Simple math. Pull up your margin balance right now. If you are paying over 8% interest, sit down and calculate exactly how much money you would save over a year by moving to Robinhood Gold. As we saw, it could be hundreds of dollars. Do not let platform inertia cost you real money.
Step 2, the Vega trial.
Download Webull. You don't even have to fund it with real money yet. Just use the paper trading feature. It's completely free and very robust. Test an AI-suggested strategy for 1 full week.
See if having that junior data scientist actually changes your P&L.
Right, or if it just confuses you. If it just stresses you out and confuses you, delete the app.
Step 3, check your match.
If you have an old IRA just sitting around at Vanguard or Fidelity, run the numbers. Does the Robinhood 3% match completely cover the transfer fees? Usually the answer is yes and then some. That 3% is an instant, guaranteed return on capital.
Step 4, audit your crypto.
This one is crucial for the altcoin holders out there. If you are holding things like DOT, NEAR, or Matic, check if you are actively losing wealth on gas fees or high exchange fees somewhere else. Webull's massive selection might save you a ton there simply by availability.
Step 5, test the 24-hour market.
Try it out tonight. Place a liquid ETF order like SPY or VTI at 9:00 p.m. on a Sunday. Just see how it feels to execute then.
Does that liquidity make you feel powerful, or does it just make you incredibly anxious?
Exactly. That raw emotional reaction will tell you a whole lot about which church you actually belong to.
And finally, step 6, review the AI digests.
Spend 3 consecutive days comparing them. Read the Robinhood Cortex summary in the morning, then read the Webull Vega alerts. Sit back and ask yourself, which one of these actually changed my behavior? Which one made me a smarter investor?
It all comes right back to that core question. Not which one is cheaper, but which one actually makes you better.
That is the only metric that counts in 2026. The tools are just far too powerful now to be passive about them.
But looking at all this data, it leaves me with one really unsettling thought that wasn't actually in the research. We keep talking about these AIs as our assistants. Vega is the quant, Cortex is the advisor.
Right.
But these models are learning from millions of users every single second. What happens in, say, 2030 when Vega and Cortex get so unbelievably advanced that they start perfectly anticipating each other's moves?
Oh, wow.
Are we even going to be investors anymore at that point? Or are we just going to be the human liquidity providers funding a high-speed war between two silicon financial religions?
That is a terrifyingly plausible scenario. The apps might not just dictate the investor you become, they might replace the need for you entirely.
Something to keep you up at night while you check those 4.0 a.m. markets? The church of data or the church of lifestyle? The choice is yours, but you have to choose.
Choose wisely.
Thanks for diving in with us. We will see you next time.